All right, traders. I know not a lot of people are going to watch this video, but this is going to be a good one, educational. Put it on audio while you're driving, whatever it is, you're going to learn a lot. We're going to go over success timeline, setting yourself up for success, prop firms, specifically going to go into comparing the features of some of the top ones and advantages, disadvantages, which ones I like. We're going to cover my setup data and how to think about collecting data, and we're gonna cover how to deal with sort of unplanned situations in the charts. So it's going to be a little bit of a longer video, and it's going to be probably pretty valuable to watch and listen to. So let's get to it. It's May 21st, something like that, 2023. And some interesting markets that we're in. First, goals for this year, end of the year, is to get 7 figures in prop funding. So first thing we're going to talk about is success timeline. So this is something that it's important to be realistic on. The success timeline. It takes time. So in all these interviews that I see, I would say the faster traders, of those who become professional or can rely on it as their primary source of income. Fix this. The faster ones, it usually takes them about 2 years, maybe 18 months. A lot of the slower ones, it takes them 4 or 5 years to be profitable. But if you go on and have a 5, 10, 15, 20, 25-year trading career, being unprofitable for the first 2 to 5 years is okay. So I came in here with a success timeline, like I'm going to make money overnight, right? And a lot of us come in that way. And especially when in my first year of active trading, I made a lot of money in a couple months. I said, okay, I'm consistently profitable now. Well, back up. This is like thinking, okay, it's a competitive sport, right? It's a competitive arena. This is like thinking, I'm a competitive player. I'm going to go into basketball, or I'm going to go into surfing, or I'm going to go into whatever it is, and I'm going to be extremely good in a year. Like, no, it's not possible. That's not how it works. You don't want that to be possible also. You want to be a barrier. You want there to be a barrier of success that weeds people out that you could get through, and that can put you in a situation where you're one of the better people and it's hard for people to get in there. You don't want it to be easy and take a year, right? You want it to take a long time, ideally. So, yeah, I mean, I think back to, I've been trading for less than a year and a half now. March, April, May, a year and a quarter about. How good was I at surfing after a year? I wasn't good. How good was I at basketball after a year? I wasn't good. How good was I at Magic after a year? I wasn't good. Right? Even 2 years is like quite a challenge. Although it's possible, trading, there's a lot more money potential than basketball, Magic, these other competitive arenas. Saying like 95% of traders fail, like 1 in 20 is great, right? That's actually really good odds. What percentage of basketball players become professional basketball players? Much less than 1%, probably 1 in 1,000. Could be even less, right? So it's not great odds, but it takes time. So for me, having traded for a year and a quarter, like let me back up. Like before every month, I was like, I'm gonna make money this month. This month's gonna be a profitable month. Next month's gonna be a profitable month. My goal is to be consistently profitable by trading for 2 years. So I have another 9 months, and I'm gonna give myself more margin for error. And what that means is like, I'm just trying to learn. I'm trying to get better. I'm not trying to force things, and it's okay if it takes a long time. It's and also like to budget my life so I can survive the 9 months, so I can survive the next 2 years if that's what it takes. Probably the way I'm set up. I could survive 2 years. Three probably wouldn't work, but yeah, and things might happen. It might that might get me. I'll feel a lot better if it happens sooner, but I'm in a pretty secure place right now where it should be okay. So my goal. Yeah, I mean, I'm not interested in going back and getting a job. I don't believe I need to do that in the meantime. If things get dire, then I can and I will, but I have plenty of runway, so it should be fine. And prop firms are a lot of what is going to give and is giving me more runway, so that's something that we'll talk about next. Or not next, but in a little bit. So, success timeline, it takes a while. Now, setting yourself up for success is the next idea. So, say it's year however many, like year 5. I'm a consistently profitable trader. I have 7 figures in trading profits. Maybe I even had a 7-figure year. A lot can happen in 5 years, right? What had to happen for me to be there? Well, setting myself up for success to be a profitable trader, staying in tune with the markets, trying to get a little bit better every day, working on my psychology, having a balanced life, accruing prop capital. What else? Just going through the experience of trading and having losses, having wins, having break-evens, having frustration, having greed, and going through the experience of trading and building off that knowledge base, that experience base, logging everything so that I have a treasure trove of data that can help guide me further down the line, and so on. So part of setting myself up for success as well is on a lower time frame of the daily. How do I set myself up for success tomorrow? Well, I don't want to be staring at charts, stressing out right before I go to sleep, right? I also don't want to go on charts first thing in the morning within 5 minutes of waking up, right? I want to go through a routine to get myself in not a suggestible state, but a real prime state to trade. And outside of that, try to not make decisions and understand that, yeah, maybe I miss out on certain things, but I'll primarily I want to make good decisions. So, and part of that, and a lot of that is I setting myself up for success. I got these time walkers for my phone and for my computer. So if I want to go online first thing in the morning, I should leave my computer out and open and on in a prominent position that I go by. And no, I'll just check the charts. If I want to set myself up for success, I put the computer away and I lock it up until it's time. That is setting myself up for success. I have to at some point log off and put my computer away and lock it up. At some point, that is setting myself up for success. So, not setting up yourself up for success, stressing out, over leveraging, over trading, not collecting data, not interpreting data, not back testing, drinking alcohol, smoking weed, and doing these things while trading. Yeah. So, setting myself up for success. I set myself up for success tonight to be successful tomorrow by putting my logging my computer up, putting it away. So I'm going to get to sleep early, and I'm going to be primed by the time that I get on. So now we're going to talk about prop firms. I have not yet received a payout, but I'm already a big fan of prop firms because now I understand what they do for risk reward. And they extend my runways considerably because if you're good with prop firms, like you don't need a lot of capital to start making consistent income. So I could draw down my funds to the lows, and if I'm a good trader, I can still make it out by having funded accounts, right? Also, prop firms are a way to reduce drawdowns. In my experience, even trading with high risk, I haven't been able to blow up an account really outside of maybe the last week when I'm in drawdown and there's only a week and I'm going to run out of time anyways. So it's typically taking me a month to blow up a challenge. And I am trading multiple challenges at once at different times, but some of them I pass, some of them I fail. It just really it seems to really slow down the losing. If there's a losing streak, then you lose challenges, maybe you lose your accounts, but you don't necessarily lose a lot of real money. Something that I've been experiencing with prop firms is that they take a lot of the fear out of trading. So I'm making fewer fear-based errors. The most common fear-based error is closing a trade at a loss at the worst possible time, like price is liquidating towards my stop and I exit right then. There's times when it's correct to close at a loss. I think if it's slowly grinding towards your stop and your stop's not in a good place, yeah, I think it's okay to exit. But if it's like a wick and you set your stop to survive this wick, like that's a fear-based error that I would make from time to time. Another one is pulling limit orders. Like I do a lot of work and I set a limit order and then like price is coming towards my limit order and I pull it. Prop firms, I haven't been making these fear-based errors. However, with prop firms, I have been making greed-based errors. The greed-based errors are taking late entries, chasing bad entries, adding on at the market, just like over trading and just thinking about, well, I can't lose money, but I'm greedy because I can win money. So that's something I need to work on. Now, what I want to get into right now is some of the pros and cons of some of these firms that I'm noticing. So the funded trader, I really like that they have low swap fees. Swaps is the funding rate that you pay for keeping a trade open. I'm swing trade, I hold trades, so swaps can be quite expensive. It can be a problem. TFT has extremely low swaps compared to the other ones, so that's great. What was also good is you get to choose between either 12% drawdown or 8% profit target. Those are both really good. I like that you can have up to 600K funding, and supposedly it's going to be 7 figures soon. So that's great. Couple things that I don't like is you have 100% margin max. So not only can you not, there's no leverage, but if you are fully deployed and price moves against you, it automatically closes out your positions. So you cannot, this doesn't really matter for a funded account very much because I don't really imagine I'm not going to want to over leverage my funded account. However, sometimes in challenges, you want to be able to put on a huge amount of risk, especially if it's the last week and you have a lot of ground to make up to either go from a retry to win or from loss to retry or loss to win. So that's a negative. And then another negative is you can't trade more than 50 ETH max, which it's not that significant. So, a 50 ETH with a 1% stop is like a $2,000 risk, which sometimes you want to risk 4,000 on a 200K account. Sometimes you want to risk 8,000 on a 400K account. So it's a problem, and it would skew towards having a bunch of 100K accounts. But I don't want to have a bunch of 100K accounts because it's just harder to manage. Maybe I could tie them all from an account copier, and maybe you can split the 400 into 4 100s. That's something I would want to ask, maybe, is past the 400K and then split it into 100Ks, and then I don't know. Yeah, point is that's annoying. So like I mostly need to trade Bitcoin. Then we have the True Forex funds. What do I like about them is they have 8% profit target and they have leverage. Okay, both those things are good. They have relatively high swaps. That's really the only negative that I've seen. And then we have FTMO. There, as far as I can tell, there's no special advantage to them because they have the standard 10% drawdown, 10% profit target. They have no leverage. TFT also has no lev, but I put that, at least they don't close you out on this as far as I've experienced. No leverage and high swaps. So I'm less interested in FTMO. I guess it has a longer history is really the only thing that's good about it. Where some of these firms are newer, like this has only been around for 2 years. This has been around for a lot longer, so it's more likely to survive, presumably. But not necessarily, because sometimes newer firms come in and they're more competitive. So prop firms. Now let's go on from here to setups. So yeah, I want to get max funded on all of them, but FTMO is definitely the least good of the bunch. The swaps is a bit of a problem, but I cannot. It is a problem. I cannot just sit in a trade for like weeks, waiting for it to move. It makes timing more important and maybe closing and profit a little bit more important, like taking a quicker TP and then waiting for another entry. So setups. So something I have been good about is journaling, logging my wins and losses over, especially since September. And to me, the most valuable thing in there is tagging the setup. So of all the setups I traded, I know the win rate, the risk reward, and the expectancy, right? So I know what setups I should be trading. I know what setups I shouldn't be. Now, my sample isn't incredibly big, so I don't have a huge margin of what is, like how accurate this is, but I'm going to assume that if something is profitable, it's profitable for a reason. I'm going to try to explain if something is unprofitable, it's unprofitable for a reason. And I'm going to bake in errors into these systems where it's like, well, if I had traded this setup better, then it would be profitable, but I didn't, and I didn't because it's hard to trade, or I made plenty of errors with this other setup, and I made money anyways because it's easy to trade, and it's resilient to errors. So first, the profitable setups. I have 3 setups that are profitable. I have daily, I'm going to call it daily reversal. I'm not going to get too in detail on what these setups actually are, but daily reversal, daily sweep into 1 hour fair value gap, and then there's also daily sweep, retrace into 1 hour fair value gap. So these are the only 3 setups that I have that have been profitable. So, and so far all my winners this month are this. So there's a couple nice features about these. The first 2, I'm predicting there's going to be a sweep. This one, there's been a sweep, and then I'm predicting there's going to be a retracement. And oftentimes this one turns into this because liquidity builds above that fair value gap to retrace, and then it sweeps and comes back in there. So a couple things make this these work for Bitcoin in particular. Bitcoin is not always, but is often quite liquidity driven. It moves to take out people's stops. It doesn't trend in the same way as Forex pairs do. For instance, from what I've seen, Bitcoin is much more likely to make a higher high before reversing to the downside, or make a lower low before reversing to the upside, because it needs to have that failed breakout where it takes out stops and takes out liquidity. And it does this on all time frames. I'm trading these on a higher time frame, and a lot of what's profitable about these is they have a transactional advantage. They're all limit orders, and they're all reversal trades. And when you have a limit order, and I'm setting them beyond daily highs and lows, I know that for the most part, I'm getting executed against people's stop market orders. So people are getting stopped out into me, and often price reverses immediately. It doesn't always. Obviously, it takes plenty of losses or a moves in favor and then comes back and stops out later. But there's a transactional advantage to trading against stop losses, where if you do that in a vacuum in the dark, I believe you don't need to know what price is. You don't need to even look at the chart or know where price is going to just know a liquidation event is occurring, and I want to be on the other side of that. Obviously, I need to look on the chart and identify areas, and there's certain parts of this that are subjective, and so on. But these setups have been profitable to me, and this month has reinforced it, where I've had several winning trades, and the only ones have been a daily sweep into 1 hour fair value gap. Now, something that I don't like about these is they oftentimes do not do well against major trends. Like if something is trending extremely hard, then I take a series of losses if I'm not holding, and that can happen. So, but I mean, it's a series of losses. Like you take a series of losses, every system produces a series of losses. But in theory, with these, one thing that's nice is if price is just ranging, you don't take a series of losses. You can't take a series of losses because you're just sitting in a position from the lows or a position from the highs, and you might get break even, but you're not like entering at the top or the middle, hoping for it to move, and then it doesn't, and then it comes back, right? So, yeah, one thing that sucks about this, which makes it a little bit hard to stick with sometimes, is that one of the problems is when you trade only with limit orders, it's quite frequent that price will come and front run your limit order by just a little bit and then move towards your target. And what's interesting is that it's not that bad. Like you didn't take a trade, right? But missing out on a winner, it feels like taking a loss, even though it's not. So you have these negative, I have these negative experiences trading these where nothing happened and I feel bad. Whereas like it doesn't, sometimes it feels worse than taking a loss with some of these other setups, because I'm just watching it for days as it moves towards my target and I just got left behind and whatever. But getting no fill is, it sucks, but it's no big deal. It's not taking a loss. So now we're going to move from unprofitable to gambling. So these things are unprofitable, but not necessarily hugely unprofitable. I'm going to go from most profitable to least profitable. So the most profitable in the gambling category, all these are negative, by the way. These are all negative. So I'm going to say losing gambling as well. It's the swing failure pattern at the market. So what this setup is you're waiting for price to take out a high or a low, usually a daily high or low, and then reverse, and then you enter on the market. So this one of my teachers, his bread and butter is this trade. I know you can make money with it, but part of it is it's really hard to execute because you're scalping on a low time frame. You are trying to get, as soon as you signal, enter as quickly as possible typically you're looking at the 5 minute or the 1 minute. You mark out a daily level, you set an alert. So the alert goes off and you need to go be alert, and that can happen at any time, and try to trade it. And yeah, just this doesn't have that like performance error component. Well, this does. Swing failure market, like these are quite easy to trade. You set your limit order, you log off. This is quite difficult. You set your alert and you stay ready, and you have to enter at a lower time frame. So a lot of things can go wrong from that, whether getting in too late because you're too slow, you're fumbling the order, or getting into missizing by mistake, having the stop in the wrong place. And from a just purely technical reason why this doesn't always work is price usually reacts to a support or resistance, but that doesn't make it a trade. So if there's like a daily high or low, price usually doesn't just blast right through it. It usually hits it, people take profit there, it pulls back, and then it either dumps or it continues higher from there. So if you trade all of these, like it's gonna give you so many false signals. So what you need to do to be successful is not trade every level, and try to trade more important levels. But then if you're trading more important levels and it's most likely going to react there anyways, might as well use a limit order where you're likely to get a better entry anyways. So this is something I'm trying to avoid doing. Also, since there's a tendency, like if I'm trading this at the market, I have a tendency to want to add to it as it's moving in my favor. And then when the retracement comes, I get stopped out. So like this is one where I've given back so many gains trading it. And on one hand, again, it's like, oh, well, you need to take profit quicker. Well, I don't want to do that. I don't think that's my strength. Like, I think it's difficult to hold trades and something that I'm often good at. So I don't want to condition myself and train myself to take profit at 0.5R or 1R. I really don't want to take profit below 2R. Usually, I mean, there's cases where something happens on the chart and it's like, well, I should probably get out. I was hoping for more, but here we are, right? So swing failure pattern market, to me, it's been gambling. Like sometimes it works, sometimes it doesn't, but I lose. Now, what also falls in this category is breakouts and breakdowns. I don't have a ton of data on this, but I lose when overall. I have some wins, I have some losses. The problem with breakouts and breakdowns is so often price will come and sweep a low and sweep a high, and if you have a stop market order there, you get filled at the worst possible time and it immediately reverses against you and you take a loss. It happens so often. So I don't like it. And then if you set your stop far away or set your entry far away to avoid like a sweep, then you're getting in the move super late and price is likely to retrace into it. It usually doesn't move in a straight line for long, right? So I know that it can work. There's high time frame breakdowns that happen. Low time frames are no good. There are occasional high time frame trendline breaks that are very significant, but I'm thinking them less as a setup and more as a signal, where if we break a high time frame trendline, like that gives me my bias to the downside. Yeah, and something to think about is with these setups, if it has negative expectancy, there's winning trades. So it's tempting to be like, this one's going to be the winner, this one's going to be the loser, but the whole overall the sample is losing, so it's better to just avoid the sample altogether. Then the third category of losing trades that I have is waiting for a daily sweep and then putting my entry on a 5-minute fair value gap. That one is done quite poorly. This one is maybe worse than gambling and is punting, which actually let's let's put this in the punting category because these ones are negative, but not that negative. This one is quite negative. So this is the ICT method, not the ICT method. It's his 2022 YouTube model. He has a lot of other setups. This one really has not worked for me. Where you wait for a daily sweep and then a retracement expansion, then a retracement to 5-minute fair value gap. There's problems with this. So it has all the same problems of a swing failure pattern, where you're going on the low time frame, you're responding to alerts, and you need to act quickly. But what makes it even worse is that there's no need or reason for price to necessarily reverse again into your area unless it's going to break down more. So you miss out on a lot of winners that you would get from a swing failure market entry by using a 5-minute fair value gap retracement. So it just has not worked for me. It's worked quite poorly for me. I mean, it's interesting. Like the 1 hour retracement has worked well, but the 5-minute has not. Well, it takes a lot more thrust to create a 1 hour fair value gap than a 5-minute fair value gap, and so 1 hour fair value gap and 1 hour gap is a much more reliable entry than a 5-minute. And another thing that I noticed is I trade like a bunch of different charts. The 5-minute fair value gaps are often not the same on the different charts. Coinbase, Bybit, KuCoin, whatever it is, they look different because the wicks are different. So it's an unreliable signal. Usually the higher time frame stuff looks the same on charts. Some of the times the 5-minute does not. So yeah, I try to just avoid the 5-minute as much as possible. Like I'll only do it when I consider like advancing stops, but not for entry. The entry should be on the 1 hour. Like there's no reason really to refine to something that, because I want to refine down from the daily to the 4 hour to the 1 hour, but I don't want to refine down to something that's inconsistent between exchanges. Whereas, yeah. Now what's also crazy is I have like 30 to 40 trades that do not fall into these categories. So these three are quite profitable. These two are unprofitable, but they have winners in them. This one is unprofitable and not great. Now miscellaneous, anything that's not these, dude, it's crazy. It's an auto loss. I have like 40 trades and one winner, and it's a small winner. That's crazy. It's hard to believe, even looking at the stats. How is this possible? Like, how is this possible? How is this possible that I lose every single trade for forever, right? Well, there's good news about that, but what falls into miscellaneous is like, it's one of them is like a limit retracement, like inside. I'm just setting a limit order at a retracement. It never works. Well, when there hasn't been a sweep. Okay, so just inside a range, I set a limit retracement. It never works. Now, some of these, it would be more than 0% if I took quick profits, but again, I don't want to take a 0.5 R trade or even 1 R trades. Usually is not really what I'm looking for. And these never go very far in my favor. So limit retracements, market, almost anything market, like market, what would be in here? Not everything market, because sometimes breakdowns, I do them at the market. I've done them at the market. Swing failures have been at the market. These are like 100% losing trades. My Bitcoin ETH Confluence, like, I know it produces winners. It's only produced losers for me so far in live trading. Market, I'm just gonna say hunch, like, I think it's gonna go up, or like, market chasing, literally like 30 some losses. Now, if I was able to remove all of these and only trade these, then I would have been profitable, quite profitable. I don't know how these will continue to perform. I believe they will continue to be profitable, and I assume that if I'm able to eliminate these, then I will be able to be profitable. Now, part of the reason why these are such bad trades or don't work is like, why am I even taking a trade that's outside of my main setups? Well, probably because I'm feeling greedy, right? Like price is going, or I'm like have FOMO. Those are the two main reasons. Greed would be like, okay, everything's going in my favor. I just won a bunch of trades. It's gonna retrace a little bit and then keep going in my favor. And actually it topped and it's going to come stop me out and I'm take loss on the new position. So yeah, just being greedy, and then also like, I didn't get filled, so I'm going to chase it, and I'm going to chase it late. I'm going to enter at the worst possible time, like auto loss. It literally never wins. And I would say that's a good thing about this. Like these ones are hard to not trade, like the swing failure, because it produces some winners. Even this one produced some winners. This one never produces winners. Like, it's clear in the data. Like, it's 100% of a loss. Like, it's a literal punt. Like, if I take this trade, I'm guaranteed to lose. So, yeah, let's not do it. So last discussion on these. Trade frequency. So part of the problem, and one of the reasons that I resorted to these other gambling and punting trades, is like, not having the patience or the faith that these produce enough trades. And they don't necessarily produce that many trades. Sometimes they only produce, okay, 4 Bitcoin or ETH individually, say maybe 8 trades a month. Okay, so 2 trades a month. Maybe 2 trades a week. Maybe if you trade both, it could be 4 trades. Problem with that is sometimes it's hard to manage risk when doing that or know what's going to happen. But in general, 2 trades a week. And is that really enough? I'm going to win 4 trades this month and lose 4 trades. Well, 4 trades is actually plenty. If it's, say, 3R, you win 4. You get 12R, and then lose 8%. Like, it's a great month. So part of the key for challenges for me is risking 2% per trade, typically, because if I'm only taking if I'm assuming I'm only going to take the quality trades, and I'm assuming I'm only going to get 8 entries in a month, if I risk 1%, I'm going to run out of time, and I'm not going to blow up. If I risk 2%, I might blow up. It's possible, but it will probably be near the end of the run anyways. 2% gives me a chance with a couple winners or one big winner to pass the challenge. So yeah, it makes sense to risk 2%. A lot of people, these educators, I wouldn't say it necessarily a lot, like Paladin, for instance, it's like, well, risk 0.5% or risk 1% on your challenge. Well, doesn't it depend how many trades you take, right? If you take a lot of trades, then yeah, risk 0.5%, risk 1% if you're taking 30 trades in a month. But if you're taking 8 trades in a month, it makes no sense to risk 1% because you will run out of time before you blow up on average. You cannot blow up. If you take 9 trades a month on average and you risk 1%, you cannot blow up, right? Okay, so this is something that I need to visualize and remember when I want to take a punt trade. Like, this is a guaranteed loss. It's a guaranteed loss. Don't do it. And like, this is gambling. Do I want to gamble right now? Should I gamble right now? And this is profitable. These are profitable. So set limit orders. Go live my life. It's like, it's easy to execute, and that's one of the things that makes it a good setup. Now the last thing I want to talk about is sort of dealing with unplanned need some rubbing alcohol, isopropyl alcohol, clean this. Okay, so this is okay, I'm gonna say like unplanned reaction. So this is something that happened a couple times in the current trading range, which we're in. It hasn't trended, and I hoped it would trend, but it hasn't trended. It's rejected. And okay, so this is something I've been debating. What do I do? And I'm a lot more forgiving on myself now. When I started trading, it's like, I should have taken profit there. I knew it. Or, I shouldn't have taken that entry or whatever. Now it's like, this experience is teaching me, and I shouldn't have known what to do because I have not been trading that long. Clearly, I needed to make that mistake or have that experience in order to learn. I don't need to lose money, but I need to experience some amount of pain, confusion, whatever it may be. Okay, so this happened a couple times this past week, or no, this past couple weeks, this trading range, where I get a good entry on a sweep into a fair value gap, wicks immediately in my favor, and I have a target, and that target is, it's not super far away, like a 5% move, which for Bitcoin is not crazy. You know, I have a 2% stop. I'm looking for a 5 to 8% move, a 2.5 to 4 RR, something like that. And I have this area. And then I hadn't planned for this, but it appears to be rejecting before hitting my target, and it's only at 1 RR. What should I do? What do I mean by it's appearing to reject? Well, it just did a liquidity grab to the upside and is dumping towards me, right? Or I went short and it just swept the lows and it's coming back. And it swept some lows. It's not the lows that I expected, right? But it's sweeping some lows and it's coming back. Well, I mentioned before, like, there's usually going to be a reaction. There isn't always. So if there's usually going to be a reaction, like, might as well hold. But you kind of know from seeing it. And if it's a resistance, not every resistance is a sell, right? Not every support is a buy. But in both of these times, and it's many times where I do not take profit because, hey, that's not the level I planned for. And then it reverses and it stops me out. And I give back. That was the peak of the move. I gave back what I made. So if there's an unplanned reaction, a sweep of a level that I hadn't planned for this level to be, what I'm thinking is I'm not going to jump in a short or like a new trade, a counter trade that I had not planned for. But if I'm in a position and it looks like a counter move is going to begin, I'm just going to get out of that trade and exit, especially if on the chart there's another good possible entry. And yeah, just bag it and chip away that way. There will be more trades. And yeah, part of it is like greed and frustration of I don't want the trade to end at a 1R win. I'm not really happy with that. I want it to end at a 4R, but this is how I went in one of my 200K accounts. It was actually up 7,000, 6 to 7,000. And then the next day I ignored a signal and I was looking at the signal at 6 to 7,000. Next day it came back, stopped me out for break even. Well, if I had that and I had the other one, and then I eliminated a couple of the straight punting, incinerating money trades, then those challenges would be looking a lot better. But it's all progress. It's all slowly getting better, slowly getting better. So every month that passes, I have more trading experience. I have more data. I have more chart patterns that I've seen. I have more knowledge that I've gained from podcasts and trader experiences. I have more experience in the marketplace. So yeah, I'm not being so hard on myself right now that But I would like to see by the end of 2023 to have 7 figures in prop funding. And that can all happen at the end. It doesn't need to happen right now. I'm trying to pass challenges, but I'm just laying the foundation right now. And yeah, going back to the data. So I need to look at that data, like only take sweep into gaps. That's it. Daily sweep into 1 hour gap. That's basically it. Or a major sweep that leaves a 1 hour gap, limit there, but usually that turns into a sweep into a gap because a new low or high will be on the other side. And yeah. So appreciate you, much love, and thanks for watching. Hope you find it useful. If you did, comment down below. Peace.